I'm back and I'm going to break down the 800% squeeze that we had this afternoon. We had a stock, DRCT, that closed on Friday at 53 cents a share and today went up to over $5 a share at its peak. This is crazy. Huge momentum, but there was a problem. This stock, because Friday's close was below 75 cents, the halt bands were 15 cents above the reference price. And so that meant this stock was halting back to back to back. And the problem there is when it goes up 15 cents and then halts for 5 minutes, it's hard to get a position going because next thing you know, you're stuck in a halt. And what's worse is that if you try to trade it against the trend, where you're maybe trying to buy a dip as it's going lower, all of a sudden it's halted down, it opens lower, it halts down again, you could be in back-to-back halts going down. Or if you short it while it's going up, you could be in back-to-back halts going up. So these can be really tricky to trade against the trend. Now, if you recall, last week we had a stock where we had a big move like this during regular trading hours, and then at the 4 p.m. bell, it squeezed up like $3 a share. Finally, the halt levels were gone because there's no halts pre-market or after hours, and the thing just exploded. I thought that might happen on DRCT, but it did not. So if we look at this stock, you can see Friday's close was, back here at 53 cents a share. So then today, all of a sudden, it kind of starts squeezing up, late morning. And the problem is you have those halt bands. So the way these halt bands work is for a stock that's below 75 cents on the previous close, the band is 15 cents from the reference price. And the way the reference price is calculated, reference price equals average price over 5 minutes. So it's the average price over the past 5 minutes. And it's a rolling, I don't know how to kind of draw. We'll just do a ball with an arrow. The rolling 5 minutes. So what that means is that as the stock is moving higher, I'll just kind of draw this out here. So as the stock is kind of moving up, going sideways here, then moving higher, the average price, let's see, is 1, 2, 3, 4, 5 candles. So the average of these 5 candles, let's say it's right here. And then the average of these 5 candles would be like down here. The average of these 5 is like down here. And so the average, the reference price is almost always trailing a little bit behind the price as the stock is moving up. And so what that means is that the halt level is essentially a band that is, in this case, plus 15 cents or minus 15 cents from the reference price. And so if it's already up 7 cents from the reference price, then it's only 7 cents away from another halt, or 8 cents, whatever the case is. So the problem here is that the halts happen so fast, and that's not something I really like. Now, I don't mind being in a halt, but being in halts that quickly is a problem because when a stock is halted, you can't buy, you can't sell. There's nothing you could do. You're just sitting there waiting, and halts are a minimum of 5 minutes. So if you jump in the stock and it goes up 3 cents and then it's halted, you're like, oh, well, great, I'm up 3 cents a share, and now I've got to sit here and wait 5 minutes. Now, a lot of beginner traders don't even know what halts are. So they're in a halt and they're like on their phone and they're like, my phone's not working, sell, 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 sell. They don't understand what's happening. They're just confused. They're panicking and they're pressing the sell button. So what happens is during the actual halt, while the stock is halted from trading, behind the scenes, there's an auction going on. So the auction is essentially the level 2. You've got the bid and then you've got the ask. And so during the halt, what often happens is you have a lot of people who are like, sell, I want to get out of this thing. And they're just putting out sell orders because they're panicking. So if it halts up at, let's say, $4, so we'll just do, this is the time and sales. So time and sales, so the last price was $4. You're going to have people who are like, I want to get out of this and I don't care. I'll sell it, let me out at $3.50, doesn't matter. But then you have other people who are like, well, this thing halted going up. It's probably going to go higher. So I'm actually going to put a buy order. I'm going to buy it at, $4. So, all right. So then there's that. And there's someone else who's like, I want to sell it at $4.50. And then someone else is like, oh, shoot, I want to buy it at $4.25. So before the 5-minute resumption, you sort of have this auction that's going on behind the scenes. And it ultimately creates a, in this case, let's say 445, 444, whatever, resumption price. So that's the quote balancing all the buyers and all the sellers. So then the stock resumes at 444, and sometimes it'll dip down immediately and then rip back up and go up to, let's say, $5 and halt again. Now, of course, it depends on what the halt bands are. And so the problem with getting in a stock 2 cents below the halt level is that now all that stuff is going on, and you don't know for sure whether the stock is going to open at the same price it halted at, if it's going to open higher, or if it's going to open lower. And now suddenly there's nothing you could do because it instantly halts down. And that's exactly what happened on a number of these trades and this halted so many times, you couldn't even, it would take a while to count them up. So what happened here, for instance, is you're seeing back-to-back halts where it halts up right here on this green candle, and then it turns around and halts down on this red candle. So halting up on the green, halting down on the red, halting back up on the green 1, 2 times, 3 times, then halting down on the red. And it halts down, looks weak, and then it opens higher and halts up once. Then it halts down, then it goes back up and halts up, then it halts down once, twice, 3 times, 4 times, and then bases out here. So for like 10 minutes, it trades within those volatility bands, so you don't get a halt. And then it halts up 2 more times, 1, 2, and then up to there, and then halts down. So I don't like trading stocks that have 15-cent halt bands because I just find them to be too difficult. Now, stocks that were below 75 cents, the halt band is 15 cents. Stocks between 75 cents and $3, the halt band is 20%, and stocks $3 and up are 10%. And so what's interesting here is there was a point today where this was trading at $5 a share. So it's trading at $5 a share, but the halt level was $5.15 up and $4.85 down. Whereas a stock trading at $5 here that, let's say, was in this range, what would the halt up level be? 5 times 20%. The halt up is 6. What's the halt down? 4. Holy smokes. So that's almost the perfect spot where you can get a lot of price action without a halt. And here it would be 5, 5.50, and 4.50. So you can kind of tell that, to be honest, this is another one of these areas where the market's not perfect. And the halt bands, the halt thresholds probably should be more dynamic in that they change how big the threshold is based on the actual current price, not the previous day's closing price. But that's not how it is. They're not dynamic. They don't update during the day. They're just based on the previous day, and that's the way it is. So for most traders, trading a stock like DRCT is going to be very difficult. And now look, it's awesome that it made a huge move, and I'm sure there's people that made some good money on it, but you can see my P&L. So this just isn't something for most traders during regular trading hours that would be easy. Now, after hours, well, that's another story. You could get a dip and a rip and a squeeze after hours like we did on that one last week. And that's something that, you could kind of get your head around. CHEK, this one did the same thing. Multiple halts going up, lower priced, very tight halt bands, closed the previous day below 75 cents, so 15-cent bands, and it goes from 160 to 190, up to 2, 220, 240, 250, up to 3, and then halts, and look at these gaps down. And this is the thing that's kind of tricky, is you get a big gap down like that where it halts down at 285 and then resumes at $2 and halts a second time. It drops $1 a share, and there's no chance to get out. You're stuck. Right? Because during the halt, you get that big gap and there's just nothing you can do. So this can be very difficult, whether you're long or short, because you can have a big gap. So right now, one of the things that is nice about pre-market trading and after hours trading for that matter, is that there are no circuit breaker halts. So that's where ZJK, just a couple weeks ago, we had this stock that went from about $8 to $50 a share right here, and it didn't halt once. There were no halts. It went straight up. And so you were able to trade it the whole way up, getting in, getting out, getting in, getting out at any time and any price you wanted. And I think that's definitely preferable to 15-cent halt bands where suddenly you're trapped and there's nothing you can do. TRAW, this one today was one of the stocks I trade pre-market, and it did move higher during regular trading hours, but we had to deal with multiple halts. Halts going up, halts going down. And unfortunately, those do make it a little bit more difficult to trade. NUKK, this one from last week, you had, during regular trading hours, a number of halts on it as well. This was right in here. Now, this one was a little bit different because, so the previous day's close was $1.35. So the halt bands for that one were in the, let's see, they were 75 cents to $3 range, so it was every 20%. So that, again, that was preferable. So you had 20% bands, essentially, which is what allowed it to go from 5 up to 10 without getting halted. Now, if it had gone up a little faster, maybe, well, it would have gotten halted, and it did halt, but in any case, that one was an example of a stock that you were able to trade during regular hours, and it actually was a little bit easier because the halt bands were not quite as restrictive. So just something to pay attention to, especially if you're trading something going into the open and you don't know what those halt bands are because you haven't checked or sort of thought about it. Because if you're trading a stock at 928, 929 going right into the 930 opening bell, and all of a sudden it's going to potentially halt up or down every 15 cents, that's something you want to be aware of because it's going to make it very hard to trade, and you're almost definitely going to be caught in a halt. Whether it's a halt going up or going down, well, that depends on the price action, but there's a good chance you're going to get caught in halts. And so it's important that you understand how these halts work. And, look, in a hot market, stocks that halt going up typically gap higher, dip and rip, and they go higher. So, you can sort of, once you understand the way the halts work, you can kind of use that to your advantage by making sure you're not in a halt going the wrong direction. So you're not buying a halt going down or shorting a halt going up because of the risk of a gap. But even still, halts just carry a little bit more risk because of the potential that during the halt, you could have a surprise resumption where all of a sudden the stock's quoting significantly lower. And that actually sort of comes back to why it's important to make sure you're using market data, as I have right here, that gives you access to halt resumption prices. Because if you don't have halt resumption prices, then unfortunately, you're not going to know where the stock is resuming. So if you subscribe to level 2 data, you're going to have halt resumption prices unless you're using a broker that simply doesn't offer them. So Thinkorswim, by the way, is one of the brokers that doesn't show you halt resumptions. So you can't see the halt levels or the resumption prices, which means you're just kind of sitting there twiddling your thumbs until you get the resumption, not knowing if it's going to be a strong resumption or a weak resumption. So it's something to check on. And look, if you're curious, you can always ask in the comments here about a broker, and I'm sure either I or someone else can give you the response of, yeah, you can see the halt resumptions with them, or no, you can't. Because if you're a day trader and you are trading during regular market hours, it's important information to have. That's data that you want to know. So anyways, I just thought I'd come on here and kind of break down that move on DRCT because I was already seeing people comment on it from my recap from earlier. So anyways, big move on that one. So market looking good going into tomorrow, even if this one's not, look, I was sort of hoping this would squeeze higher, but it didn't. So even if this by 8 p.m. is kind of back down 350, whatever, that's fine. It just speaks well to the strength of the market right now that we had a stock that went up 800%. So we're still definitely in a bullish, position right now. And although tomorrow will be an early close, 1 p.m. closing bell, for pre-market traders, I don't think that's going to really change anything. So I'll be streaming 7 a.m. bright and early for Warrior members. And I'll be hopeful that we have another decent gap scan and I can lock up another nice green day before the Christmas holiday on Wednesday. All right. So anyways, that's it for me. And by the way, I'll remind you guys that in case you didn't check it out already, we have our sales going on right now. New year, new you. Now, you may not know this about me, but I actually started day trading I started day trading. Well, I set up my first account in 2001, but I wasn't day trading in it. I was trying to invest and figure out how to actively, manage my own account. It was a small account. But when I started day trading, I did it as a New Year's resolution. And for me at that time, the goal was to wake up every day in time for the opening bell. Now, at that time in Vermont, most of the friends that I had all worked in the restaurant industry. And so I was staying up really late. I was sleeping late into the day. And so just committing myself to waking up early was tough. Now, for any of you guys in California on the West Coast, that's the challenge that you face. Can you commit to getting up early enough to watch, the pre-market session or the opening bell? Because that's when we have this window of volatility. And I know it takes discipline, but for me, I did it as a New Year's resolution. I was like, you know what? I'm just gonna commit to doing this. This is my goal for this year. I'm not gonna make a list of like 1,000 things I wanna do better. I just wanna wake up every day, watch the market, and try to see if I can find some opportunities to trade. I had a friend who had made $15,000 trading a penny stock in high school. And at that time in my life, I thought, if he could do it in high school, then, why can't I do it? I'm going to give it a try. But I thought, I'll just have to wake up every day and start looking for stocks I can buy and, kind of figure this out. So anyways, I started as a New Year's resolution. So maybe you'll do the same. So new year, new you. You could check out the Warrior Starter, the Warrior Pro, and our Warrior Pro special bundle, which includes a year of access to my broadcast. So you can log in every single day and trade side by side with me. And you guys who join the Warrior Pro special will get a 7-day money-back guarantee. So you can give it a try for a week if you haven't already done a 2-week trial or something like that. Give it a try, see if you like it, and I think you'll be impressed. I think you'll be really pleased. So anyways, that's it for me, and I will see you guys back at it first thing tomorrow morning. Reminder as always, trading is risky. My results aren't typical, so please manage your risk, take it slow, and practice in a simulator before you put real money on the line. Guess what? Warrior Pro members, you've got 90 days of access to a trading simulator that you guys can use. All right, I'll see you guys tomorrow.